G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. All right, let's go. So in today's Sunday walk and talk video, I've got some topics to talk about, going over the week that we just had in all the different markets. So I'm just in this nice sort of resorty area up in the Gold Coast, getting away for a week and a half. So we'll start with the first topic I want to talk about, and that's the German government has finished selling all their Bitcoin. So it's all gone. All the sold pressure of, I believe it was $3 billion, is now being vanquished and sold into the open market, and that selling pressure has pretty much died off. So it's gone, but there's Mount Gox is the other one that could be a potential problem that we have to wait out for, because there's more money coming out there in regard to that one. It's a similar amount, it's less than $10 billion. Let's cross through this gate here. Sorry. So that's still got to hit the market, and yeah, that could be even more selling pressure that could drive the prices lower. But we still have ETF demand and the inflows from the big boys. The issue is the ETFs, the Bitcoin crowd, are still going strong. So I don't see enough outflows to really drive the price against the inflows. If you're going to use that as a reason, the Bitcoin price going down, I think it's a pretty silly reason. There's other macroeconomic things that you can say that really cause the price to go down. But yeah, you can see on Twitter the sentiment is just so bullish right now. I think the German government's selling, and we'll just cross over here real quick. He's gone, so we're going to go up from here. That's what they think. And the rate cuts are coming sooner than expected due to the CPI print just coming out cooler than expected. So that came out, and that was 3.1% estimate, and it came at 3%. So that was a big win for the inflation numbers cooling off. I'll just wait for the cars to go past the road here. Hang on, 10 seconds. Sorry. Cross now. Go up here. So the inflation numbers came in, I said 3% versus 3.1 estimates, down from 3.3 last month, year over year numbers. So a lot of people on Twitter saw that as a bullish sign. The Fed has to cut sooner. So everyone's saying, oh yeah, September, rate cuts are coming. This is bullish for the altcoin market and going to go up from here. And they said it's not smart at all. They don't understand how it works. So sorry about the noise in the background. But yeah, it's not the case when the Fed have to cut earlier than expected. It's usually a bad thing, guys. It's not a good thing. And you look on the CME Fed Watch tool, and you see that the rate cut probabilities are about 90%, which is quite high. And when everyone's expecting it to happen, it usually doesn't happen. It's usually the opposite. So I wouldn't go off that data at all. It's not the most accurate, and it always chops and changes every day. It always changes. So yeah, I would not trust it. People expecting that rate cuts to come and things to go bullish, and you know, QE's around the corner and all this crap that everyone's starting to preach, which I don't see it all happening. The Fed didn't say they're going to start buying assets. They're just reducing the balance sheet at a slower rate. They're tapering their security holdings, which is quite still risk off in my opinion. It's Bitcoin. If it's in the crypto market, it's just Bitcoin that I'd stay with versus the rest of them, because I don't think they're going to do well as the Bitcoin dominance just keeps on trending higher as the Fed, stay their course of trying to control inflation, bring it down towards their 2% target, which I think they're nearly reached it. It's about, they're on their way. They said 2% over time, not 2%. That's an important thing to note. It's not what you think it is, guys. They trick you with their words in the media. They do their press conferences and you think, oh, it's got to be 2% before they start cutting. It's not true. It's over time. So they're just about there. They're at 3%. They're almost at 2%. And yeah, the Fed are sort of happy with the way inflation's going. We did have PPI come out the day later, and the PPI suggests that things aren't cooling off as what you people expected. The PPI came in at 2.6%, above 2.3% expectations. So the PPI numbers for the price producer index, the producers, their costs are going up. So the consumers might see that the inflation numbers for them, the goods and services, are going down, but trending in the right direction. The PPI numbers didn't reflect that, and they're a bit sticky at the moment. That's something we have to watch. Oh, something else on the road, guys. Now at the canal, beautiful canal there. Just walking along. Get out and about. First day here, I just landed, and landed this morning, and just chilling out, settling in for a bit. Away for a week and a half, like I mentioned, and yeah, I see how my videos go because I don't have the good equipment. I've got my crappy laptop, which is not very fast. It's very slow and it's pretty old, and I have to use my just basic Twitter and charting off there. I can't use TradingView because it's just not quick enough to process the speed. So yeah, what do you do when you're away? You don't have the exact same gear, so it's a bit of a problem, but we'll have to get through it. All right, so we'll see how that goes. So yeah, the Twitter sentiment I was mentioned before was overly bullish. I think rate cuts are coming sooner. September, July, definitely not going to happen. Fed's not ready yet. The data's not there, so I don't see them going at all too soon. Just going to see some more. I think the thing to watch is the unemployment rate, not the inflation. But you know, inflation could stay sticky and then rise back up as well. Because I'm watching the commodities market pretty heavily, and there's leading indicators there that things could take off again. We'll have to wait and see. But so far, so good. The PPI, we'll have to see there. It's more data. I believe the Fed's just a long way away from cutting. Could be into November to December. And these people on Twitter are just getting well ahead of the curve and thinking this is bullish, and we're going to get September, and all of a sudden altcoin season starts and all this stuff, and they're posting all these different charts and how we're just sweeping the lows to fake out and going higher, and because we're seeing Bitcoin start to push above 60,000 now, and yeah, things are seeming a little bit bullish, but don't get ahead of yourselves. Data, the unemployment rate is still quite trending upwards, and job openings is decreasing, and consumer debt is not looking quite healthy, and the consumer sentiment is not looking good either. So yeah, we're seeing these things come to us, and we have to wait and see the data going forward. But yeah, I'll talk about also the residential markets. Seeing the southern states of the USA, we're seeing 299,000 houses for sale, which is on record, higher than in 2006-07 period, which is before the financial crisis happened. So not looking good there. And yeah, so we have to watch out for the market in the real estate sector, seeing how things are going. We're seeing, the lumber prices starting to drop. It's a sign of slowing down, and the construction developers and builders will, okay, prices are cheap, we can build these units fairly cheap and make a good profit, but they're seeing that the buyers aren't quite there. Higher rates, this environment is quite tough. People wanting to refinance, it's not quite the environment to do that. They want to keep their low interest rates and their 30-year mortgages. So yeah, I wouldn't bet that a lot of people want to sell their houses and downscale, for example, and buy something and pay a way higher rate, like 7% rates at the moment, or just under. And they're seeing us starting to crack, and the activity for these developers and construction companies start to slow down because they can't find the buyers like they used to. And like 2020, 2021 was a hot market, and I believe we're sort of coming into the tail end of this hype, and I believe the real estate market's going to slow right down and trickle into the stock market as well. So very concerning there. So yeah, you know, we could see those things develop. The stock market starting to give in. The Mag 7 has run, might have come to a bit of a halt, correction phase. We have to wait and see there. But yeah, seeing the rotation into small stocks. We had a big sell-off the other day when the CPI numbers came out, and you can see that 4 days worth of price action was erased with one candle, and that was a really concerning sign. We saw rotation in defensive stocks, saw rotation into gold start to pump during the CPI numbers. We also had a defensive stance. We had the staples against the semiconductors take off. Again, you know, been bleeding against the semiconductors for a very long time because of NVIDIA, because of Apple, because of Google. And now you're seeing that we're transitioning. We might be, we don't know. This could be just a fake out or a short-lived rally and just a slight reallocation, just taking profits from the big 7 companies because they've been performing so well. Got to wait and see there, but I believe it's just hard to tell. I'm not going to give a prediction on if it's going to roll over tomorrow. We have to wait and see, like I said. But yeah, we're seeing some interesting signs just after the CPI numbers come out. So yeah, and like I said, you just got to, you know, look at these things and take less risk because it's uncertainty, the uncertainty in the market and the numbers, the economy. When things start to catch up, when bad news becomes bad news, realise that anything that's outperforming in this market and overvaluations will come back down to fair value because you can't overprice these things too long. Sorry about the noise. But yeah, we have to wait and see there. We also have, what else? So yeah, they're pretty much all the topics I want to talk about for this video. In the week gone, there was a lot of volatile news, a lot of things happening, and yeah, we have to look into how we can position ourselves going into next week. We have the ETH ETF potentially launching. I see that there's some news going on Twitter talking about that, and potentially the next few days or 5 days or God knows when, but people are saying very soon that we're going to get a ETF launch. There's some rumors going around. So if that gets launched, I'd like to see what the ETH Bitcoin valuations happen to do. If they go up aggressively into the event, the launch day, and then sell off like a quick pump and dump, or they just continue to bleed against Bitcoin as the inflows aren't quite what they expected. That's another thing we could really look at. But you have to wait and see there. So yeah, it's really telling. Whether we'll see how much inflows come in because there's quite a few issuers with each ETF, pretty much the same ones as the Bitcoin ETF. You got your BlackRocks, your VanEck, your Valkyrie, and ARK, and all them, and they're all sort of filed big boys. So yeah, you have to wait and see how that goes. We don't, like, there've been predictions out there that they're gonna, I think the Bitwise CEO was saying about, see, $15 billion of ETH inflows in the next year or two, which is quite a lot. And definitely could see that for sure. Then I saw the other day on Twitter that we could see over $1 trillion of inflows in the same similar sort of period. So I'm thinking, what's going on here? You know, one's saying way over $1 trillion, which I think is ludicrous, and one's saying a $15 billion estimate in 2 years. So yeah, it's crazy. And then you got the Sol ETF, Solana. I don't even want to go there. So yeah, we'll talk about that as well. And that's the week ahead we're looking at. And also we have retail sales coming out. for the US. So that'd be really interesting to see the numbers of the consumers. Were they spending more this month, or calculating? I think it's calculating last month's data, so June's data for July, and seeing if that comes in stronger than expected month over month, or if it comes in weaker, as the economy suggests that consumers aren't quite spending what they were, as we're seeing a lot of slowdown, a lot of inflation in the food, energy, and yes, we see CPI numbers coming down, but that's only year over year, month over month. Still, we had about a minus reading, I think. It's yeah, it's still looking sticky though. It's still high. People are still feeling the struggle. We have to wait and see, and what we have to do there. It's yeah, we'll keep this video pretty short here, and just please, I want you to smash the like, comment your thoughts below, subscribe to stay updated, and I'll catch you in the next one. Cheers.